What's up guys, and welcome back to another Wynand Crypto video. Buckle up crypto warriors, we're witnessing a financial revolution that's about to shake the banking world to its core. Major players are making moves that could transform how billions of dollars flow globally, and XRP might just be at the center of it all. Swift's announcing they're integrating third-party digital currencies through ISO 222 protocols, while Brad Garlinghouse boldly claims XRP could capture a massive 14-15% slice of Swift's transaction volume within the next 5 years. Plus, I've got exclusive footage from Monica Long that will blow your mind. And here's the kicker. Bank of America just revealed they're developing their own stablecoin, and all signs point to potential XRP ledger integration. Let's dive deep into this game-changing intel. Watch this.
In addition to being able to provide a better end-to-end client experience, frictionless payments also help Swift member banks be more efficient as a community, minimizing costly exceptions and investigations, enabling us to better compete from a cost perspective with new entrants and closed-loop networks, enabling member banks to leverage global open network that is Swift's strength with a more controlled payment orchestration capability backed by the rich structured data of ISO 20022 format opens up further opportunities for us banks to provide value-added products and services to our clients. But Tanya, I think, though, what excites me the very most of all, and what I see as the biggest new opportunity for the industry related to Swift's new platform is the potential for integration with a variety of networks, rails, and third parties leveraging the rich ISO 20022 format and the transaction orchestration of the new platform to manage that interoperability.
Listen to what we're hearing here. They're talking about revolutionizing client experiences through frictionless payments. But here is what's really exciting. They're explicitly mentioning integration with various networks and third-party rails using that rich ISO 222 format. This isn't just a banking evolution, this is the foundation for crypto integration at scale. Now here's where it gets absolutely wild. Brad Garlinghouse just dropped a bombshell at Apex 2025 in Singapore. He's predicting XRP could realistically capture 14% of Swift's enormous transaction volume. We're talking about a network that processes trillions of dollars annually, so even a fraction of that market share would be absolutely game-changing for XRP's utility and price potential. I had to fact-check this bold claim, and sure enough, Garlinghouse did make this statement publicly at the Apex conference. When you consider that Swift handles the backbone of global finance, this projection isn't just optimistic, it's revolutionary if it materializes. Watch this.
I think maybe the use case with bank-issued stablecoins is, especially with the large banks, where they create a network amongst themselves and they're using their issued stables for interbank settlement. So it's just making their kind of existing kind of legacy world interbank payment settlement mechanisms more efficient through blockchain. Which is probably, but we have seen some examples of that, like I think JP Morgan's efforts were based on that. And this also calls back to like our first strategy and our first go-to-market was working with the big banks on a product, called RippleNet, and we found a lot of success there. So I also know from working with those banks as customers that there is a need for this, for greater efficiency and transparency amongst them.
Yeah, no.
Monica's insights here are absolutely crucial. She's discussing how institutional demand for both XRP and RLUSD is completely unique in the marketplace. The use cases she's outlining, particularly around bank-issued stablecoins for interbank settlements, align perfectly with what we're seeing from the major financial institutions. She's talking about large banks creating networks among themselves using issued stablecoins for interbank settlement. This isn't theoretical anymore, it's becoming operational reality. JP Morgan's already pioneering this approach, and it connects directly to Ripple's original strategy with RippleNet, where they found substantial success working with major banking partners. The transparency and efficiency Monica mentions, that's exactly what banks desperately need. Current interbank settlement mechanisms are outdated and expensive, so blockchain-based solutions aren't just attractive, they're becoming essential for competitive survival. Now let's talk about the elephant in the room. Bank of America's massive announcement. Their CEO confirmed they're developing a dollar-backed stablecoin both independently and through industry partnerships. This dual approach suggests they're hedging their bets across multiple blockchain platforms. Here is what makes this incredibly bullish for XRP. Bank of America holds an astounding 151 blockchain patents, with 83 of them specifically referencing Ripple's technology or Ripple-based settlement systems. Think about that for a moment. Why would you invest countless hours and millions of dollars filing patents around specific technology if you weren't planning to use it? Their patent portfolio spans cross-border liquidity, tokenized deposits, FX hedging smart contracts, and supply chain finance. Many of these patents include pre-funded Ripple settlement diagrams, showing they've been seriously researching integration possibilities for years. The infrastructure's already built, the patents are filed, and the partnerships already exist. Bank of America has been working with Ripple since at least 2017, with their first patent application citing Ripple Distributed Ledger for real-time settlement. In 2020, their head of global banking publicly confirmed their multi-year partnership with Ripple for blockchain payment solutions. So what's the logical next step here? Rather than building entirely new blockchain infrastructure from scratch, it makes perfect business sense to leverage existing technology they've already invested heavily in researching. The XRP ledger offers exactly what banks need: speed, low costs, ISO 222 compliance, and proven interoperability. The timing couldn't be better either. Bank of America's CEO emphasized they're waiting for clear regulatory frameworks, and those frameworks are rapidly materializing. The Genius Act just passed the Senate, with bipartisan support providing comprehensive stablecoin regulation that removes uncertainty and creates clear compliance pathways. Watch this.
I think as a community, and I mean that broadly, across Singapore, across Southeast Asia, you have a community of entrepreneurs. Like the energy that I feel being here, I mean, it's I think profound. And so I think this will continue to be a region that thrives and leads, and I think you'll see more and more faster adoption, partly as you see the US as a regulatory leader, that a lot of other countries look to the US. I think people grossly underrated how much momentum is going to be created by the largest economy in the world finally shifting into a pro-innovation, pro-crypto posture.
Brad's energy here is infectious. He's talking about the profound entrepreneurial momentum across Singapore and Southeast Asia, and how the US is shifting to a pro-innovation, pro-crypto stance will create unprecedented adoption momentum globally. This regulatory shift is absolutely crucial. When the world's largest economy embraces crypto innovation, other nations will follow suit. We're witnessing a complete transformation in how governments and institutions view digital assets, from skepticism to strategic adoption. Senator John Thun's recent statement that cryptocurrency is here to stay isn't just political rhetoric, it's official recognition that digital assets have become mainstream financial infrastructure. When Senate leaders publicly advocate for crypto integration, it signals institutional confidence at the highest levels. The numbers back this up too. We've got roughly $250 billion in stablecoins circulating globally, with major corporations like Uber and Airbnb exploring integration. Traditional financial institutions aren't just considering entry, they're actively developing products and services around blockchain technology. Watch this.
President, a significant number of Americans are engaging with cryptocurrency. That includes Americans who use stablecoins. And then there are the individuals and businesses around the world that access the American dollar through the use of dollar-backed stablecoins. Mr. President, stablecoins are a relatively recent financial innovation, but they've quickly caught on. They offer easy payments with the speed and security of the blockchain and the stability and usability of the dollar bill. There are roughly $250 billion of them now in circulation. Traditional financial institutions are said to be considering getting into the stablecoin business. And companies like Uber and Airbnb are reportedly exploring integrating them into their businesses. Mr. President, it's clear that cryptocurrency is here to stay, and it's time that we bring it into the mainstream. Passing the Genius Act is a good first step. The Genius Act would provide a clear regulatory framework for stablecoins. It would ensure Americans can trust who they're doing business with when they purchase stablecoins, allowing the American people to exercise financial freedom with confidence. The Genius Act would also protect against threats to our national security and from criminal activity. It would require stablecoin issuers to uphold the same standards as other financial institutions to monitor and report suspicious activity, comply with U.S. sanctions, and block illicit transactions.
This is exactly the kind of leadership we need. Senator Toon's outlining how the Genius Act will provide regulatory clarity while protecting consumers and national security. The Act requires 100% reserve backing in cash or short-term treasuries, monthly audits, and compliance with the same standards as traditional financial institutions. What's brilliant about this approach is that it doesn't stifle innovation, it creates a framework where innovation can flourish safely. Companies can now develop stablecoin products with regulatory certainty, which removes the biggest barrier to institutional adoption. The national security implications are huge too. By creating clear rules for monitoring suspicious activity, complying with sanctions, and blocking illicit transactions, the US is positioning itself as the global leader in responsible crypto regulation. And you guys, I have a special trick for you, which nobody seems to be using, and I cannot wrap my head around why, because if you sign up through my link down in the description onto the BTCC exchange, you get a 10% deposit bonus, and now stay with me here. Now here comes the important part. If you have any trading capital on any other exchange and you move it to your newly created BTCC account, you get, on top of your capital, you moved another 10% extra trading capital. As an example, so if you move or deposit 100K to your account, you get 10K for free. I'm not kidding. I really don't understand why nobody's doing this. To me, it really seems like people sometimes are too lazy or just don't like free money. I mean, like, I cannot make that account for you. You will need to do that yourself, alright? So let's jump back into the video. Now here's something that will absolutely blow your mind. Ondo Finance just launched their flagship tokenized treasury product, OUSG, on the XRP ledger. This is massive because it brings together BlackRock, Franklin Templeton, and Ripple in a single groundbreaking collaboration. OUSG represents over $670 million in tokenized US Treasury asset across all supported blockchains, with $30 million committed specifically to the XRP ledger at launch. This isn't just another DeFi experiment, it's institutional-grade treasury management operating 24/7 on blockchain infrastructure. Here's why this matters. Qualified purchasers can now seamlessly mint and redeem tokenized treasury securities around the clock using RLUSD. Everything happens in real time, on-chain, with institutional-grade compliance and security. The capital efficiency improvements are staggering. Banks currently have between $5 to $27 trillion locked up in Nostro Vostra accounts worldwide. Money that's basically sitting idle, earning minimal returns. XRP-based settlement could unlock this massive pool of capital, enabling banks to reduce operational costs by up to 60% while deploying funds more productively in local economies. Think about the ripple effects. Literally, this freed up capital could fund new businesses, educational initiatives, community development projects, and economic growth initiatives that are currently constrained by inefficient settlement systems. The technical integration is equally impressive here. OUSG on the XRP ledger leverages native support for tokenized assets, decentralized exchange features, and advanced compliance tools including decentralized identities and on-chain credential management. It's institutional DeFi at its finest. Ripple and Ondo have committed liquidity to ensure strong trading environments from day one, while the XRP ledger's high throughput and low fees make it ideal for institutional-grade treasury management. This is exactly the kind of real-world utility that drives sustainable value creation. Now let me show you something else that caught my attention. Vivo Power's recent announcements. They're not just adding XRP to their treasury, they're partnering with Flare Networks and deploying $100 million in XRP through Flare Fastest systems. This represents the first major institutional use of Flare's technology for generating yield on XRP holdings while maintaining security. Vivo Power's also adopting RLUSD as their primary cash equivalent reserve, demonstrating how publicly traded companies are integrating XRP-based solutions into their treasury operations. This isn't speculation anymore, it's operational reality with measurable financial impacts. Even the competition is making moves. Stellar's bringing PayPal's PYUSD stablecoin to their network, emphasizing their infrastructure for real payments, real merchants, and real global reach. While I appreciate healthy competition and want to see all legitimate projects succeed, this kind of positioning feels like they're still taking subtle shots at Ripple and the XRP ledger. Look, I genuinely want Stellar to thrive. Many XRP holders also own Stellar tokens, and rising tides lift all boats, but I would love to see more collaborative energy rather than competitive positioning against our bigger brother in the blockchain payment space. The broader trend is undeniable though. We're witnessing institutional adoption of blockchain technology for real-world asset management, cross-border payments, and treasury operations. The XRP ledger and similar platforms are becoming the infrastructure backbone for enterprise blockchain adoption. Major asset managers like BlackRock and Franklin Templeton aren't just experimenting anymore, they're committing significant resources and launching production-ready products. The tokenized treasury market alone now exceeds $5 billion in combined market capitalization, with BlackRock's BUIDL token at $2.5 billion in TVL and Franklin Templeton's Benji at 707 million TVL. This convergence of traditional finance and blockchain technology represents a fundamental shift in how institutions manage assets and execute payments. We're not just seeing adoption, we're seeing integration at scale, with regulatory clarity providing the confidence institutions need to fully commit. The momentum is building exponentially, regulatory frameworks are solidifying, institutional products are launching, and major corporations are integrating blockchain solutions into their core operations. XRP is positioned at the center of this transformation, with proven technology, established partnerships, and regulatory clarity that competitors are still working to achieve. This is just the beginning, you guys. We're witnessing the early stages of a financial revolution that will reshape how value moves globally. The institutions are here, the technology is proven, and the regulatory framework is emerging. Everything's aligning for massive adoption and utility growth. If this breakdown got you as excited as it got me, smash the like button and subscribe. Thank you very much for watching. Until the next time, Wynand Crypto out.